Hello everybody, it's Payam from Niche. Hope you're all well. I thought we'll have a look at some mortgage rates and remortgage rates specifically in the current environment. I waited for the Bank of England stuff and all the huff and puff to sort of go away and all the YouTubers put their sort of slant on it. And I thought we'll also wait for the market to stabilize. Some lenders reduce rates, some lenders pulled products and certain things. So it's a good time to have a look at it and see where we stand. So I've done a product search based on loan to values, so 95%, 90%, 85%, 75% and 60% loan to value. I've done a 2-year fix, 5-year fix, as well as ones with no early repayment charge, so you can get out of it. So let's get to it. Let's talk about it, and then we'll talk about other things like 3-year fixes. I've also done a really good video, and it didn't get that much views actually. I was a bit upset with it because I thought it was very good because it talks about reasons why people are remortgaging, some of the reasons people are doing capital home improvements, for example, debt consolidation and some of the dangers around that, and looking at that specifically, other reasons for remortgages. We talk about debt to income level reasons. We talk about other reasons, pulling money out of your property because you're not selling now, and for weddings, for cars, and some of the reasons that lenders have got for this. So go and check that out. I'll leave a link below in the description, and I'll try to put a graphic up on the video. So let's get to it. First of all, guys, I'll have to say that some house rules. I've pulled off these rates today at 9.51 on our sourcing system, which is whole of the market. It does not include some lenders like First Direct that only go directly to the public and they don't deal with brokers. There's only a few of them out there. Variable rates could be trackers, discounted rates. Basically, they don't have early repayment charges, which is the meaning of ERC. I've based it on a £300,000 property in England and Wales. Sorry, Scotland. I'm just trying to make my life easier. And I've also excluded specific schemes like first home schemes, new build products, and some key worker stuff. So anyway, let's get to it. So in terms of the products themselves, let's see if we can bring this here. Right, okay, right. So when we look at this, I've only gone for products that have got free valuation, free legals. There's two reasons why. One, a lot of people are coming off a 1% rate and they don't really want to be paying for additional costs like valuations and legals. Also, it's a good comparison because a lot of the people that are coming off with the high street lenders are often being given product transfers which don't include these fees. So I've just tried to make things a little bit simple. Looking at it, guys, let's look at the 95% mortgage here. I question anybody that will take a 95% remortgage with no early repayment charge. There's got to be a damn good reason. Maybe I'm going to sell the property within 6 months or so for you to do so. Otherwise, it just does not make sense, okay? However, when you're looking at the lower loan to values, then a lot of people are looking at these, including myself. I'm looking at it and I'm going, well, I've got equity in the property. Is my income going to be stable? Well, we don't know. Income could be hit with this bloody market that we're in. But, it's generally for people that think, right, I've got a lot of equity. I could probably ride out another year or so. If there is another interest rate rise or two, I could probably ride that out. However, it could be to my advantage for me to ride this market out and then either just stay as rates come down. I come down with it because it's a variable product, or I've got the flexibility of getting out of this. Now, what I haven't included, which to be fair, I should have. I'm just looking at rates. I haven't included some of the fees involved. They're generally around the £1,000 to £1,500 mark, but you've got to take that into account. If you're going with an early repayment charge product, you're going to pay £1,000, for example. You've got to take that into account. You're paying £1,000 and you might not be sitting there for more than a year. So take that into account, but there are reasons why people are taking a no early repayment charge product. Then you're looking at a 2-year fix. Now, we've seen the 2-year fix gradually come down from lenders. And we've seen some lenders reduce them by 0.25 basis points. Some are doing sort of 0.4 basis points. Again, I'll question whoever that's going on a high loan to value 2-year fixed, okay? There are some circumstances that I've got people are doing. So let me give you some of those, some of the clients that I'm recommending a 2-year fix. Why am I doing a 2-year fix when people think property prices might come down or their circumstances, basically there's not that much equity? I think The first point is really good. Property prices may come down. So that is a danger, okay? Because you might be going in at 85% or 90% loan to value, but in a year's time, it's expected really for rates, for property prices to reduce. So you've got to take that into account, guys, right? You can't just go willy-nilly into this, but you've got certain people that may have got adverse credit right now. So that, that's going to drop off in 2 years' time. So we're going with a specialist lender, and maybe in 2 years' time, we can go to the high street and we're going to remortgage them away. So that's one reason. The second reason involved within that is maybe you've got people that are on a visa, okay, and they're doing that on a visa. So it's important, they may get their permanent rights to reside. So again, very, very important for us to look at those things and see what's going to happen. Then you look at the 5-year fixed. The 5-year fixed is 5.98, again, really high loan to values. But this is interesting. When you look at the someone who's got 40% equity and someone who's got 10% equity, guys, I don't think they're pricing that right. I don't think they're pricing the risk. If you had a load of money, would you give that money to someone who's got 40, 50, 60, 70% equity, or someone who's got 10% equity with the way market predictions are going? So I think someone is dropping the ball here in regards to rates. Okay, look, there's not that much difference, guys, to someone who's got 15% deposit to someone who's got 40% deposit. And looking at this one, a 10-year fix, as expected, lenders don't really want to lend that high loan to values, and you've seen a couple of rates, 5.39, not particularly very competitive, and I would again question why you would take a 10-year fix in this environment. So what do we make out of this, right? What we make out is lenders still believe rates are going to come down. That's why they're pricing that under, some of them are under 5.25, which is the Bank of England base rate, okay? So they ultimately believe it's going to come down. That's not to say they're going to be right. Lenders have been wrong all the time. In the last couple of years, I can point to loads of lenders. There are some lenders that have repriced their product 3 times in a month. That tells me they've got it wrong. That tells me they've got it wrong. And that tells me when you're looking at that 5-year fix, the difference between someone who's got 50, 60, 70% equity and someone who's got 10 to 15% equity, that's wrong pricing. They're not risking. They're not putting into risk. Unless they think rates are going to come down dramatically, or they think rates are going to come down. Now, I don't believe rates are going to come down dramatically. I think it's all to do with nothing with this government and nothing to do with Bank of England. I think it's to do with the US. I think we've got to look at the US and see where things are. At the moment, rates have actually increased. Mortgage rates have increased, and they're hitting the 8% mark. So they were sitting around the 7% mark. They've creeped up to 8%, which is not great. What's going to happen with that? Well, I think we wait until the US election. I think all of a sudden you're going to start getting green shoots, as they say. Funny that, it's going to be an election around the corner and you're going to start seeing green shoots. So I think, as they say on the streets, the Conservative Party are going to take their beating and they will probably just try to weather the storm. And then when the US market starts looking down and they start reducing rates because of the election, funny enough, I think you're going to start seeing rates reduced. Now, yes, granted, they're supposed to be 2 separate entities, the Bank of England as well as the government themselves, but I think the Bank of England certainly will look to the US Fed for guidance and the Euro Central Bank as well. And I think they've all been pretty similar in what they've done so far. And I just think there's a coincidence that basically we've got the UK elections coming up as well as the US elections coming up in a year and a bit, and I think nothing much is going to happen. I think the lenders are going to do their own thing, just like they have done right now. The lenders are going to do their own thing, and that's why we're seeing a 3-year product. I think we've started seeing emergence of a 3-year product, and I think I will probably put a 3-year chart in there next time, because there are some people that are hedging their bets, just like the lenders are, and saying, look, there are some people that don't think 2 years is going to be enough time, but they don't want to fix themselves in for a 5-year, so they tend to go for the 3-year. As in regards to the pricing, the 3-year product is not that dissimilar to the 2-year product. Okay, so some careful consideration needs to be given when you are looking to remortgage. As I've said, I've done a video on reasons why people are remortgaging and some of the strategies and some of the criteria involved. So go and check that out, and I will leave a link below. And also, I would love to get your views. Guys, it's so great when I do a video and I get comments below giving me their impression. Some of them will say you're talking nonsense. Others will say, no, actually, we agree with you. Others have got their own theories around why rates are going to reduce. The bond market, it could be the gold market, it could be the stock market, it could be the property market, why they believe that there's going to be rates. There are some people that will say, actually, the UK government have got no wiggle room and we're screwed. Others will say, no, actually, they're just going to manipulate things as and when they want to, and there's an election around the corner. And I think I'm in that camp pretty much. But let me know what you guys think. I'll catch you on the next one. Take care. All the best. The content of this video does not constitute giving advice. It's purely for information purposes. All cases should be discussed with a professional mortgage broker. As a mortgage is secured against your home or property, it could be repossessed if you do not keep up mortgage payments. Niche advice is authorized and regulated by the Financial Conduct Authority.